Hi, I'm Jimmy. In this video, we're looking at Alibaba, ticker symbol BABA. So we're going to look quickly at Alibaba's business, and then we're going to take a peek at what we think the fair value of Alibaba stock could be, and is Alibaba worth buying today? Okay, so let's start with Alibaba's business. So Alibaba breaks their business into four primary segments, and these segments are according to their revenue in fiscal year ending in 2021. Now, their fiscal year actually ends in March of every year, so it's through March of 2021. That was the last annual report they had. Okay, so their smallest segment is their innovation initiatives, and last year this put up about $330 million worth of revenue, and they have different apps. They have text messaging apps, navigation services, things along those lines. This only accounted for about 1% of their revenue. And then when we look at the next one, which is digital media entertainment, well, this segment accounted for about 4% of revenue, and this is where they put revenue for Alibaba's pictures. They have a music platform, think sort of like Amazon Prime or Prime Video and YouTube Music, things along those lines. That's what this segment does. Then their next segment is their cloud computing segment, and this is one of their fastest growing segments, which is probably logical. They do everything from data storage, then they have app services, they have analytics, machine learning, security management, the list goes on and on for that segment. And then we have the largest segment, which is their core commerce segment. Now, this, in their annual report, Alibaba breaks out their business like this. So we can see that they have a bunch of different subsegments within this larger segment. But basically, this is where they sell their products via Alibaba.com, which is their wholesale platform. Then they have 1688.com, and then that's a leading business-to-business platform. And then they have Taobao, I believe it's pronounced, Taobao.com. They have Tmall. And basically, if we're going to look at this in a simplest possible way, this Alibaba, this part of their business is basically Amazon, but in China. And it does a whole lot of wholesale business, plus all the movies and cloud offerings that Amazon already offers. So you might have heard this one called, Alibaba called the Amazon of China, and that's very much true. Okay, now this brings us to some of the factors that have driven the price of Alibaba's stock down over the past few months. First, a few months ago, Ant Financial was supposed to go public. It's actually called the Ant Group, but they were supposed to go public in both the Shanghai and the Hong Kong stock exchanges. But then with some regulatory changes or some regulatory uncertainty in China, well, that got delayed. Now, Alibaba owns about a third of the Ant Group, which is why their stock got hurt in this time period. That's about when this was happening. Alibaba, the day that was announced, Alibaba's stock, I think, was down almost 10%. Then a little while later, in this time period here, well, news came out that Ant Financial or the Ant Group was considering restructuring some of their business and putting some of their more profitable business lines into a holding company, and the market freaked out a bit by that, driving the stock lower, although we can see it sort of recovered shortly thereafter. And then Alibaba announced that they had to pay a $2.8 billion fine to the Chinese government for basically violating some of their, what the Chinese government called monopolistic behavior. And this sort of ties to the regulatory uncertainty that was happening in China that, shook things up with the Ant Group. Now, I also want to recognize that I understand there may be some question marks for some investors investing in a Chinese company. And I think it's important to recognize that the uncertainty around whether investing in a Chinese company is a safe move for investors outside of China, I think that would lead to a natural discount. Let's say Amazon and Alibaba were completely comparable. Well, in theory, Alibaba should be trading at a slight discount due to that uncertainty, assuming everything else was the same. So I think we should expect at least some discount to what other similar companies would trade like. With that being said, let's shift over to our discounted free cash flow calculation for Alibaba's stock. So over on our new Learn to Invest channel, where we call it Learn to Invest Shorts, and now these are not videos about shorting a stock. These are videos that are less than 60 seconds long. So brief videos or quick videos, whatever you want to call them. Either way, YouTube calls them YouTube Shorts, so we took the name and ran with it. And what we do with that channel is we try to do a quick calculation of a company, a bunch of different companies, but one company in each video. And then we try to see, does it look undervalued? Is it worth a deeper dive? That's how we came to do this Alibaba video, because this was the exact calculation that we used in our short video over on the other Learn to Invest channel. And we can see we got a fair value for Alibaba stock of about $303 per share. Now, this looks fairly appetizing when we consider that currently Alibaba stock is trading at about $215 per share. So that's, again, the reason why we decided to do a deeper dive to see if we are missing anything. And ultimately, the reason why I wouldn't just buy a stock after doing a quick calculation like this is I really want to have an understanding and an idea of how analysts came up with their estimates. And frankly, when I look at these numbers, most of these numbers I can logic out. I think it makes sense up until 2025. And I'm not sure why we see such an enormous jump in free cash flow estimates going out to 2025. And if I remember correctly, I believe in 2025, that those estimates are based off of 4 different analyst reports. But I haven't been able to find any good reason as to why there would be such an enormous jump a few years down the line. Now, it is possible that the answer is out there and I just haven't been able to find it. So if you happen to know why analysts might be estimating a big jump like that going out a few years, please let me know in the comments below. But for now, just to play it safe, I think it could make more sense to adjust these numbers to a more explainable level. So the previous year saw a free cash flow growth of about 8%. And again, that's fairly reasonable given how fast Alibaba is currently growing. But instead of having a huge jump, what if we increased it by, instead of 8%, let's say it slowly was going to tick lower, and we'll move it to increase it by 6%. And that drops the free cash flow estimates to about $34 billion in 2025. Now, if you're not sure how to do this whole calculation, I've actually done a video where I walk through how to do a discounted cash flow calculation. The purpose of discounted cash flow is we say, okay, how much cash is the company bringing in? How much free cash flow is the company bringing in? We project out, in theory, project out as far as you can, and what is that worth today? Well, ideally, we want to pay less than that today. That's what this is trying to do. That's what this is trying to do. If you're curious how to do this, I'll leave a link to my discounted cash flow guide in the description below. But either way, because we dropped our free cash flow estimate, the fair value drops from $303 per share down to $263 per share. Okay, now the question is Alibaba's stock worth buying today? We know it's trading right around $215 per share, which is below our calculation of what should be today's value. And for me, I believe a stock like this calls for a higher margin of safety than I would normally go after. In this case, I think 20% margin of safety would be fairly reasonable, which means that we want to pay a price that is 20% less than our calculation of fair value. And if we do that, I think it makes a ton of sense to buy Alibaba as a long-term investment. So as long as Alibaba stays at least 20% below our calculation of fair value over the next few days, I plan on buying Alibaba stock in my personal portfolio. Now, if you're wondering how I went ahead and analyzed the stock to determine what my margin of safety would be, well, I actually did a video where I go through 8 simple steps to analyze the stock. And if you're curious, perhaps that could be a good next video for you to watch. I got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.